Welcome to EAGTAX and our tax advent calendar, where we will be sharing tax tips and explanations in the lead up to Christmas. For day 9, we will cover the taxation of investment property. We will cover furnished holiday lets tomorrow. Today, we will focus on the commercial and residential property tax regimes. As a reminder, if you accept a lodger into your home, you can earn £7,500 a year without paying tax. But remember, they still have rights regarding occupation. When calculating property profits, residential property costs are fairly self-evident. Costs for advertising, insurance, management fees, repairs, tax advisor fees, and legal costs for agreements and evictions are some of the costs which can be deducted from the rents received. An election can be made to use the property income allowance of £1,000. This may be useful if your actual costs are lower. From 1718, tax relief on interest and finance-related costs began to be restricted. Since 2020-21, basic rate tax relief is only available on such costs. In 2016, the replacement of domestic items relief was introduced. This covers items such as movable furniture, furnishings, appliances, and kitchenware. This allows tax relief on the cost of replacing domestic items where the new item is substantially the same as the old. The initial cost is not permitted. Owners of commercial property are able to access tax relief on capital costs through the capital allowance regime. The structures and buildings allowance may also come into play for extensions, renovations, and new builds. Premiums are also more commonplace for commercial property leases. This can bring into mix capital gains and income tax considerations. Once the profits and losses of UK property are calculated, these are aggregated. If there is a net loss, this is carried forward and offset against future profits. Overseas property are grouped separately. Property losses can sometimes be offset against other income, however these are limited to capital allowance-based losses and those with agricultural connection. Please note that if you're leaving the UK and letting out property, there is a separate regime called the non-resident landlord scheme, which requires consideration before departure. Sales of residential property are now part of the 60-day report and pay requirements, so don't wait until the self-assessment filing deadline to report your capital gains. Finally, from April 2024, landlords with income over £10,000 will need to comply with the new Making Tax Digital quarterly filing requirements. At EAGTAX, we are partnering with Hammock and can provide discounted rates for this landlord-focused software, which is MTD compliant. We hope you found this useful. Please take a look at our website for more information and contact details at eagtax.co.uk.